Former Congressman Ron Paul says short the market. The Fed is making a mistake, has made too many mistakes. Now we have 3 minutes before the closing bell. Let's bring in Wells Fargo Chief Economist John Silvia and Jan VanEck of VanEck. He's the CEO. Jan, to you. You're the equity guy. Ron Paul says short the market. You say?
No, that's looking at one dimension. I mean, I understand why he's concerned about valuations. PE ratios are really high, but if Janet Yellen's right and the rest of Wall Street is right, earnings are going to grow, and we should be very comfortable at these equity levels, if not higher.
What would you buy right now? What do you like?
Well, the way we like to get into U.S. equities is by buying quality companies, what we call wide moat companies, and then we buy them when we think they're cheap. So we have a rebalancing in one of our ETFs. So there are expensive companies, and that's how we like to do it.
Okay, they're not cheap right now. So you're making a contrarian play. In just a second, I'll get it. I want our viewers to wait for that. John Silvia, did you see any door or window open a crack in what Janet Yellen said to go from 3 interest rate hikes this year to 4 if the economy becomes stronger and stronger under President Trump?
No, I see no case for 4 rate increases. I think Laurie Rothman's comments earlier were very positive. The market feared 4. They got 3 for 2017 and 3 for 2018. There was no mention of shrinking the Fed's balance sheet, another big positive. And then I'll pick up on John Hilsenrath's point that they talked about a symmetric inflation target around 2%. That means 2% is not a ceiling. It's symmetric, it's a range. All those are very fundamental factors and positive for the equity market and the bond market as well.
Okay, and we're looking at Fed funds futures, 75% chance in September. Back to you, Jan. You're making a contrarian play right now. What is it?
Well, for the fixed income markets, I think what the Fed is doing by being so predictable is like a lobster being stuck in a pot of boiling water. Fixed income investors, we think, have to reallocate in face of a rising rate environment. We like high yield, and we like diversified fixed income like emerging market debt, which has lower correlation to U.S. Treasuries.
Yeah, this is people have been pulling billions out of these funds.
Right, we think they're making a mistake there.
Okay, and you think Ron Paul's making a mistake. Do you think, John Silvia, that Ron Paul is wrong when he says short the market now?
Well, the economy continues to move ahead. I think Janet Yellen was pretty positive on her statements in the economy. It does look like interest rates are rising slower than what was discounted in the marketplace. All of that is favorable for the economy.
Well, as we look at what's going on in these markets, the dollar is the victim today. It is at 1-month lows against a basket of currencies. The NASDAQ is just short of an all-time record, but only by 4 points here, as the Dow, NASDAQ, and S&P do spike in the wake of what was widely expected to be a 1/4 of a point rate hike. That's what